Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, and a finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey, and shareholder advocate.
And we are the Money Café.
We are the Money Café, Alan, and you are Alan everywhere. I've been trying to keep up with all of your appearances. You're on the ABC Daily podcast yesterday, big columns on the ABC. It's all housing, immigration. I think you better take charge from the start and tell us what you've been up to.
Well, I was on Ali Moore again yesterday as well, so there you go.
ABC Melbourne, very good.
That's right, ABC Melbourne. So I think the reason for all this is that ABC is doing a week on housing. They've decided that housing is a big deal and that they're going to have a whole week on it. And that kicked off with a column by me on Monday morning. And also something I did on the ABC News on Sunday night. The interest, and yesterday we had interest rates not coming down. And I said on my Monday column, I said, well, the reaction to the non-rate cut on Tuesday will be that it's a bit of a blow to mortgage holders, which is duly what happened. And I said, well, that's what you need to know about why house prices aren't coming down, because nobody says, oh, that's a blow for people who are trying to buy a house, and it's a blow for housing affordability.
That is true. So house prices up, 6% for the year, and you're blaming the combination of 3 cuts in interest rates and record levels of immigration, including that amazing statistic I heard you trot out of the 2.9 million temporary visas as at September 30, which is the highest ever.
That's right. And obviously that's a combination of tourists and other kinds of working holiday makers and so on. But it's still, a lot. And the number of student visa applications in September was also a record high of 19,500.
No one wants to go to America anymore, do they? I mean, we are the greatest country in the world. People want to come here. Work, tourism, students, family reunion. Why wouldn't you want to come here?
Well, that's a good point. I didn't say that, but that's true. And maybe we're catching a whole lot of people who don't want to go to America anymore. That's very interesting.
I think absolutely true. I mean, it's like British doctors who don't want to work in the NHS. They're all coming to Australia. Lifestyle, good salary, stable politics, Medicare, good benefits. I mean, best place in the world. Of course, they're all coming here. And even when the government's making $4 billion a year in visa fees, they've tried to put the price up on a whole bunch of visas. Even putting that price barrier in front of people has not slowed the massive demand to come to Australia.
Yeah, and one of the interesting things that so I talked to a bloke named Abul Rizvi, who used to be the head of the immigration department and is now retired, but he
is a gun. He is an absolute gun.
So Abul tells me that, and I didn't know, nobody knows this or knew this, but apparently what happened a month or two ago was that the government increased the number of universities that are on the lowest risk rating for student visas from about 7 to 15. And they did that because all these universities were asking for more federal funding, and naturally the government refused. And the education minister said, look, don't worry, we'll get you on a lower risk rating for student visas, and you can get more students. And that's what happened. So that increased to 15, and that resulted in a record number of visa applications in September. That's a straightforward. It's a straightforward alternative to more federal funding is more students, more foreign students. So, and that's been the trend over 2 decades of federal funding for universities declining and student visas, foreign students increasing in order to replace the federal funding.
Well, I think I've said this to you before, Alan, that post-manufacturing, Melbourne has become one of the 4 biggest international student cities in the world, and the University of Melbourne's Parkville campus has the most international students of any campus in the world at 14,000. 42% of residents in the city of Melbourne are students. So it's a great export earner. It's great because people, long-term trade links with Asia. Smart people come here, get a degree, trade with Australia. But there's obviously the issues around housing pressure and the ability of infrastructure to cope. And
well, that's it. I mean, and
complex issue.
And what that means, I think, is that it's not a great export earner at all. I mean, it isn't. We keep talking about, how education's a fantastic export earner, but that's rubbish. For a start, as you say, it requires housing and infrastructure for the people who come here. Unlike other exports, it involves actual human beings arriving in Australia to stay. And secondly, most of the money, or half the money that's counted as an export, is actually them bringing money from overseas and spending it here, not doing that, but earning it here. So they're earning money here and then spending it, and that's called a export as well, even though it's money that was here already.
Well, I remember Glenn Davis. He's Kevin Rudd's best mate, former head of Prime Minister and Cabinet, was the head of Melbourne University, came into a City of Melbourne briefing a decade ago. I was sitting in there, and his opening line was, "Hello, councillors, I'm your biggest export earner. We are making $300 million a year in export earnings in the City of Melbourne, more than anybody else."
Yeah.
So, I don't think you can argue it's not good for the economy. I mean, it is a service that we're exporting.
I got a letter from a professor yesterday saying, he said, anyone who's working in the G8 universities knows how utterly appalling the international student program is. Not the students, of course, they're lovely, hard-working young people, but the fact that vast numbers from China don't speak English well enough to write a basic email, and yet they're getting law, science, business, etc. degrees. The men who run universities haven't been in a uni classroom for decades, and so they continue to trot out the cliche that it's all wonderfully enriching. Academics are too scared of being called racist to speak up, but the numbers are devastating for staff and seriously undermine the education of domestic students who universities are meant to serve.
So that this is a volume leads to less quality argument, I think. And they're chasing the dollars for volume, and the standards are falling, is the argument from this incumbent professor.
Yeah, and she says that the next crisis is going to be schooling. All those students who stay are of childbearing age. I saw figures for the increase in primary students in the next 10 years, and it was staggering. Governments have been failing to build schools, particularly for high-density housing, for decades. They just expect churches to step up. And another issue is universities allowing thousands of students to do qualifications we don't need. It's madness. There were 1,000 students in first-year law at MQ last year in Macquarie. Most will never practice and are probably doing law because a teacher or parent thought it was prestigious. Meanwhile, there are tiny numbers of students in planning and surveying, qualifications we desperately need. So look, I think we have a real problem and we're not facing it properly. And the part of the problem is, as she says, that the other people, the main people who are against immigration, are racist. And the trouble is, as soon as you speak up like me, you get called a racist.
No, but you're a trusted voice, Alan. So I think you're one of the few people who can safely weigh in on that topic and not get labelled a racist, because you're coming at it from an economic and a housing price point of view. But one little anecdote, actually, you talk about failure to build schools. Margaret Gardner, who's married to Glyn Davis, so they're the ultimate power couple, and she was been head of multiple universities. I heard her give a speech about Melbourne, and she said that after the gold rush, in a 15-year period after the gold rush, Victoria did something unique in the world. They built 500 schools in about 15 years, and they had three things that had never been tried before globally. They were compulsory, secular, and free. So Melbourne was the richest city in the world after the gold rushes. And what did we do with that money? We built 500 schools across the state that were compulsory, secular, and free, and that had never been tried before. So it's a good point. Use your riches to invest in education. Should do more of it.
Yeah. And the other thing, just before we get off that subject, the big boom in immigration, which is causing house prices to go up, has also resulted in the comeback of One Nation, which is polling ahead of the Greens. And I think that's a problem as well.
Well, I would counter and say that there are right-wing anti-immigration insurgencies skyrocketing all over the world.
That's true, there are.
And
right.
One Nation's penetration or market share is the worst in the world. for a right-wing insurgency. So Pauline Hanson has been incompetent ever since her massive vote in the 1998 Queensland election when they won, what it was, at a dozen seats and they were into the 20s, that if she was actually someone who was capable and could communicate, then they would have been a lot more successful. So Barnaby, looking to maybe take over from Hanson, would be a very important development because he would execute the right-wing franchise a lot more effectively than she has done.
Yes.
Oh, goodness. We're not meant to be talking politics, Alan. So
no, let's move on. Just on interest rates, I'm going to be talking to Paul Bloxham this morning from HSBC, and he says that the next move in interest rates will be up. So I'll ask him why.
Don't you owe me some money? Didn't we have a bet that you said interest rates wouldn't move for 2 years or something? I'm going to go back and check the record. Read Hansard on the Money Café.
Yeah, right.
You were wrong, Alan.
So interest rates will be cut 3 times.
I know. And now they're talking about going up and down like a yo-yo, not steady for 2 years. Do you agree with Paul Bloxham that the next move is going to be up because of the shock breakout of inflation last week?
I don't, but that's okay. Nobody has any idea really. So, as I've proved, yes. I mean, I do think interest rates are probably going nowhere for a while. Absolutely staying where they are. Hey, tell us about, before we move into questions, tell us about the AGM season. What's going on?
Oh, look, it's it's hard to keep up. Just last Friday, I went to 5 meetings back to back, and it was just all happening all day. So I popped over the ditch to Sky Entertainment, the casino company based in Auckland, which owns the Adelaide Casino. 26%, 18% against 2 of the Australian directors. They've lost hundreds of millions. It was a massacre from the floor. Then I popped into Pinnacle, which is this booming funds management company, at 9 a.m. And David Kingston, the best activist in the country, the rich lister, he was going toe-to-toe with all the Pinnacle boys at 9 o'clock. I thought, well, this is a good job. He's doing well. I'll pop over into Steadfast at 10 o'clock, the insurance broker. Oh, my God, the 78-year-old CEO, Robert Kelly, had been stood aside over a sexual harassment allegation the day before. The stock was down 7%. The chair, Frank O'Halloran, 79, was retiring. So I thought, goodness me, the 15% against Rem. I thought, goodness me, this is all happening. I'm going to pop into Car Group, the old car sales, at 11 o'clock. Bang, 21% against the chair, Pat O'Sullivan, because he's overboarding. 19% against the director because he was from PwC. And these days, you're not allowed to have any directors who are from your audit firm. So PwC is the auditor of the Car Group. And then I popped over to Perth in the afternoon for Sandfire Resources and a booming copper company. And I only got stuck into them about Aussie Supers made $500 million on their shares. And they picked up a whole bunch of cheap shares 4 years ago, which should have gone to retail, was my argument. So I was hitting them with questions about, Aussie Supers made out like bandits with a special capital raising deal. Why haven't you looked after retail? But it was a bit of a moot point because everyone's making a fortune in Sandfire Resources. So that was just Friday, Alan. So,
well, some 78-year-old's been done for sexual harassment. That's very impressive, I think.
Well, there's been a complaint. So he was stood aside the day before, but shocking censorship. Like, I lobbed about 4 questions, asking the directors up for election if they were on the committee that made the decision to stand him aside and what was the evidence. And they just censored every single question that I lodged asking about that, even asking Frank O'Halloran, like the number one legend of the insurance industry in Australia. Frank, do you think the share price is down 7% because you've stood aside the founder CEO, or was it something in your speech? Why is the company suddenly gone from being worth 6.9 billion to today it's literally worth 5.9? They've dropped $1 billion in market cap. And he just, that was censored. The question wrangler wouldn't even read it out.
Right.
So this is the problem with online AGMs, that they can censor you. Like, what's going to happen at Tesla on Thursday, Alan? So you've got the Tesla AGM tomorrow, computer shares running it, Templestowe started, Manningham started, Computershare, world's biggest share registry company worth $21 billion, great company. They'll be the umpire. They're the electoral commission who will be looking after the Tesla shareholders, all million plus of them, as we work out whether Elon Musk is going to get his, it's $1 trillion pay packet, they say, but he's got to create $7 trillion to make $1 trillion himself. But It is interesting. And the Tesla AGM, Alan, I mean, people complain that I'm running for 17 boards and I'm causing all this chaos. There are 9 shareholder resolutions at the Tesla AGM on Thursday. And Elon, Robin Denholm, his Aussie chair, and the board are all recommending that shareholders vote against all 9. So I only run for boards because you can't do shareholder resolutions in Australia because it's too hard. You're not allowed to put up an opinion-based resolution. You've got to get 5% of the stock or 100 shareholders to sign. It's too hard. But you can run for a board, just self-nominate after buying $500. So it's really easy. And you won't believe this, there's been 15 ASX announcements in the last 3 weeks, Alan, that have mentioned you. Can you believe that? You've been on the ASX announcement platform 15 times in 3 weeks. Do you know why?
No, why?
Well, you're in my platform. Stephen Mayne co-hosts the Money Café with Alan Kohler. That's part of my CV. So I've got 100,000 Bank of Queensland shareholders are going to be reading that. Well, no one ever reads these things, but there you go. And no one censored you out. Like I've had censorship proposed by Myer, a couple of dodgy Perth-based mining companies have sort of, censored the platform, but they never censored the mention of Alan Kohler.
Well, they wouldn't want to.
No. And the other thing I found funny is some companies, when you run for their board, they call you, they're calling me Stephen David Mayne. And I'm saying, well, what? Am I working for Alan Robert Kohler AM? I mean, why are you putting my middle name in this nomination? So there's all sorts of quirks that come with contested elections. And I've got a big battle going on with Myer at the moment where they're proposing to totally censor everything I'm trying to say about why I'm running and Solomon Lew having too much control and all this sort of stuff. And they've sent me an email on Friday saying, we're just going to mention, crikey, your CV, you're a former councillor, the Alan Kohler connection, but we're not going to tell the 40,000 shareholders why you're running. They're proposing to totally censor it. And most of the other nominations, the censorship's been very limited. I mean, they do attack you. They call you, they say that you haven't agreed to a bankruptcy test and you only own one share. I mean, they get on the front foot. They have a crack back. But most of them, it's been good. They haven't been censoring the platform, like Rupert Murdoch, who didn't even say how old I was when I ran for the News Corp board. But Myer, very naughty boys with their censorship, so I'm still waiting for it to come out as to whether they're going to follow through or cave to the campaign of if Reece, Harvey Norman, all these other companies can publish the platform, why can't Myer? And companies, can they be trusted to run contested elections if they won't even tell the shareholders why someone is running, apart from the fact that they do podcasts with Alan Kohler? That seems to be acceptable.
Well, I'm proud to be associated with you, Stephen, if I may say.
I was going to say, I thought I'd get in trouble because I didn't actually ask your permission to do that.
No.
I'm probably damaging your brand.
No, not at all. I think
Captain Sensible, and I'm this crazy serial pest, and I keep name dropping you to try and get votes.
No, you're Don Quixote and I'm your Sancho Panza. Yes.
Now, I'm running for 17 boards and we've got 17 great questions, Alan. So why don't we get onto those? But I'm going to steal from you as the co-host. But before we do that, let's have a word from our sponsors.
Looking to build your investing confidence and discover new ideas? Join Intelligent Investor at ASX Investor Day in Sydney on November 8 or Melbourne on November 15. It's a full-day event packed with practical sessions from leading investment experts. Catch Intelligent Investor's Deputy Head of Research, Gaurav Sodhi, on the top investment ideas and stock picks panel. Tickets are on sale now. Just Google ASX Investor Day. Make sure you use the code NOV25 to get 20% off your ticket.
So we're opening with Marianne this week, the only female questioner of the 17 who got through gatekeeper Greg, our wonderful producer this week. And Marianne writes, I was a bit surprised in your last show to hear only sympathy was offered to listener Nicole regarding the challenges of purchasing property on a single income. While empathy never goes amiss, maybe encouraging a thorough cash flow analysis might have provided more practical guidance. According to a recent KPMG report, the cut-off household earning capacity for middle-income home ownership in Australia is $110,000, well below the $250,000 single salary mentioned. ultimately, someone earning $250K at 35 should find it very achievable to purchase a home in 2025. The broader debate should, however, acknowledge the difference faced by individuals and households earning significantly less.
Well, I don't know about that KPMG report. I haven't read it, but 110,000. I mean, what you'll get is a shoebox in middle of road, I'd say.
I agree, particularly after paying all that ridiculously high income tax. And the fact that you can't tax deduct the mortgage payments either. So
that 110,000 as a single income to own a house in Australia is rubbish.
I agree.
But anyway, well said, Marianne. Thank you very much.
Indeed. And more female questions, please. Now to the 16 blokes.
And Lachlan from Canberra says, I really enjoy your charts and housing coverage. I was wondering if you'd ever done one with a like-for-like comparison of loan ownership, not just home ownership, between generations of the same age. After seeing, what do you mean generations of the same age? Aren't we talking about different ages for generations?
Keep going, boss.
God, after seeing that Australia has the highest household debt globally because of house loans, I'm curious whether the share of outright ownership has changed between generations. Any insight would be greatly appreciated. I have seen graphs of that, and the answer is millennials own fewer millennials own homes than baby boomers, and fewer Gen Z own homes than millennials, and fewer Gen X, if I've got that right, own homes than the other ones. So
the older you are, the more likely you are to own a home.
Correct.
Which it's been forever thus, I would suggest. But the ability to climb that ladder and the speed at which you climb that ladder and pay off that mortgage, that is the thing which has moved dramatically, I would suggest. The only thing I know about this one is that from a voting intention point of view, the only level of voter that will absolutely be likely to vote for the coalition or vote Conservative is someone who owns their home outright. And the category of person who is absolutely least likely to vote for the coalition is a renter. And they are like above 80% each way. So there's a massive correlation between owning your own home and voting for the parties that will perceive to be protect your asset pile.
Yeah.
Now, Jeff says, this question will be of interest to me. I was recently advised by my financial advisor to move my share and ETF portfolio from Perla, a low-cost CHESS-sponsored online broker, to NetWealth's Wrap platform. Before moving, I did a lot of research and carefully considered the pros and cons and ultimately agreed. One thing I overlooked, however, was that I've now lost all the voting rights that I had previously with my direct shares. This is something I'd never heard discussed before. Is this something that should be highlighted by planners to their clients, or is it considered unimportant as so few people partake in AGMs? I did speak to NetWealth about this, and they said they only pass on notices they feel we need to know about. Now, Jeff, I actually I sent this to NetWealth, and their PR representative replied, basically saying that, yes, they do have an online voting system, and votes that they considered material, they do pass on to their many, many tens of thousands of clients, which got me thinking, Alan, are any of my 17 board tilts going to be deemed by NetWealth to be material and to be worth passing on to all their clients? Or does this partly explain why at last year's Qantas AGM, only 1.04% of the shareholders voted, 1,556 out of 150,000. So there is a crisis of participation in voting, and I suspect the Wrap platform part of the system is certainly not helping in voter participation or capital raising participation, but NetWealth does say they on-pass all capital raising offers to their clients, and that is far more important, participating in capital raisings, than just being a meaningless small vote at an AGM.
How do they decide what votes are material? I mean,
well, why
is it up to them?
Well, that's a good question. So that is what I personally think, that if you want to make sure you can participate democratically and that you can see every capital raising offer that's coming through, then you should keep direct ownership of shares in your own name, coming to your own address and signing up with your own email address. Because I've detected just in 3 recent capital raisings by Linus, Tuas and Eagers Automotive. They were all massively in the money, 50% in the money, and the majority of the shareholders did not participate. So I actually think there's something going on where retail shareholders are not being advised or told by middlemen and women that there's an in-the-money SPP capital raising on the go and they should take it up. And that's why us retail shareholders are leaving many, many hundreds of millions of dollars on the table and getting diluted because of apathetic or non-informed participation by individual retail shareholders. So hopefully Net Wealth is all over that, because they often pop up in top 20s. It's top 20 shareholders, the Net Wealth platform. And that's an aggregation of probably hundreds or thousands of shareholders. But if there's a SPP or a capital raising offer, how hard are they getting the documents and advising people to participate? Because frankly, the reason that there's very little participation is because no one gets paid as a success fee if a retail shareholder participates in a capital raising. There's no incentive to pass it all through. So I think there's an issue there, but Net Wealth says they do on pass relevant and material voting and capital raising offers, and so we'll take that at their word. But their AGM is this week, I think, or next week, and it's not even a hybrid. You got to turn up in person to ask a question at the Net Wealth AGM. So that to me says that.
Are you going to do that? Are you
well,
going to turn up?
No, I'm on a slow day. I'll be sleeping that day, so it doesn't work with my silly up and down cycle. So I will miss that one, unfortunately. But it is an issue. All right, 13 to go. What do you got?
Davo says, I own some shares in PWR Holdings after following your GS. What's GS?
I'm not sure.
Looked to be a good company, but recently JP Morgan came onto the register as a substantial shareholder and as a lender to PWH, which to me means the borrowers intend to short sell. I loathe this practice and drive the price down. Is there any other reason for borrowing the stock? Well, is that right, that just because JP Morgan is both a substantial shareholder and a lender, that it's about short selling? Is that right?
Correct. So if someone pops onto a share register, and if it's Macquarie or JP Morgan or Deutsche Bank or one of those big global investment banks, it will often be part of their share lending service, where they'll go to the big index funds, they'll pay a few basis points to borrow the stock. They'll lend the stock to some hedge fund who thinks the price is in a bubble and will fall, and they'll short sell. So one of the great, a lot of people bag short sellers. I think they're fine. They hold companies to account. Sam Altman from OpenAI was sledging short sellers in the last couple of days. So was the Palantir CEO Alex Karp last night. But ASIC releases the data on the net short position on all stocks every day or every week. It's great data. And frankly, PWR Holdings is currently 10.46% short. So that's a lot. There's only about half a dozen companies which have more than 10% of the total shares on issue currently sold short. So Pilbara Metals, 15%, Domino's, 15.6%, Guzman Gomez, 12.53%, Flight Centre, 10.5%, PolyNovo, 10.7%, Paladin Energy, 12.23%, and IDP Education, which is linked into that student market we were talking about, they are 11.7% sold short. And Boss Energy, the uranium play, is 23.6%. That's the largest of the lot. So that just tells you that smart money or hedge fund money thinks the stock's going to fall. And that's the only thing you should be aware of. But sometimes you can get killed with a short sell. Tesla, Palantir, short sellers have lost their shirts entirely, because the problem with short selling is your losses are unlimited, because the stock can just go up and up and up and up, and you've got to keep buying it, and then you're bankrupt. So look, when you buy a long stock, you can only lose the value of the shares. If you do a short sell, your losses potentially can be unlimited. So it's only the big boys with big balance sheets who can get into this cliff top poker with short selling, and I don't know.
Cliff top poker.
It's a heavy game. Musk, Palantir, Peter Thiel, Sam Altman, versus the short sellers. Eddie Groves, the ABC Learning guy, he was blaming short sellers. So anyone who blames short sellers for the stock falling, I say, you're crying poor, you're crying foul. Shut up, just run the business, because the share price will look after itself. If you are running a good business, it doesn't matter who's shorting, longing, who's doing what. Just run the business and the share price will look after itself, and stop whinging about short sellers.
Okay, your turn.
Bruce, I note recent comments by Michelle Bullock at the Australian Business Economists gathering in Sydney, where she conceded that she and her overseas peers were perplexed by ever-rising asset markets in the face of so many economic risks, including inflation. I consider that this asset price inflation is a rational response to concerns that populist policies that force governments into deficit spending will reduce the value of money. Investors consider that the only way to protect themselves from this decline in the value of government-issued currency is by holding alternative assets such as equities, property, or precious metals. Now, this is in your wheelhouse, Alan. What do you reckon?
Yeah, it's absolutely right. That's definitely an element to it. I mean, obviously, there's much more to what's going on in the share markets than that. Particularly the American share market with the artificial intelligence companies. I mean, that's basically a bubble, an expectations bubble of everyone's going to make tons of money. Which may or may not be true, but there's certainly an element of people thinking that, or investors thinking that the value of money is going to decline, and I think that's why gold has been rising. Everyone wants to get property and also equities. Yeah,
it is interesting with the US that the markets just think they can keep running a deficit at 7% of GDP endlessly. You know, that the $37 trillion of debt and a 7% deficit to GDP doesn't matter. And the only way they can service that ultimately or pay it back would be printing money. But we haven't seen the crash in the US dollar that would follow, because I guess the power of their economy, the fact they're dominating big tech, people are still saying buy America, because these big tech AI companies are just shooting the lights out, and everyone's valuing them very highly. Now, the next question is actually linked, where David is asking about if I put money in an S&P 500 index fund, 36% of it is going into the Magnificent Seven big tech stocks, who are the ones betting the farm in terms of capital investment on AI. However, if AI is really going to change the world, I expect the benefits to trickle down to transforming many of the other 493 stocks. And then he goes on to raise this very interesting question that most index funds are based on the capital market cap weighting. But is there an argument for patient investors to consider equal weighted S&P 500 index funds? Now, Alan, an equal weighted S&P 500 fund will own 0.2% of the ETF in all 500 companies. And I've had a look at the returns on the S&P website, and sadly, the S&P 500 equal weighted index has only delivered 7% over 1 year and 11.8% over 5 years, versus the market cap version, which is 20% in 1 year and 15.9% in 5 years. So the scoreboard, David, says that the market cap ETF has dramatically outperformed the equal weighted ETF. And it makes sense, because if you were doing the equal weighted thing, every quarter you're madly selling NVIDIA, because it's more than 0.2% of your portfolio. And NVIDIA has gone up 13-fold in 4 years. And the reason it's out, that the market cap index has outperformed, is NVIDIA is the biggest factor. So why would you be limiting yourself to 0.2% of NVIDIA? Then again, if all the big tech stocks crash, that performance will turn around, and you'd be saying in Harry hindsight, it'd be saying, oh, I should have been in the equal weighting index because I was overexposed to the AI bubble.
Yeah, that's right. So an equal weighted index would protect you from a Mag 7 crash. That's true. So, if you think that's going to happen, then that is definitely the way to go.
Yeah, so you might pivot to that now with the view that it's a bubble, but the last 5 years you'd have dramatically underperformed if you'd done that strategy. But, maybe pivot now.
But also he raises a decent point, which is that if the AI companies all make tons of money, as expected, then every other company is going to be better off, because they will be buying the AI to replace human beings, and their profits will go up as well. So there are people who say that a good way to basically participate in the AI boom is to just buy the whole index, and not just the US S&P 500 with 36% AI stocks, but that's like the Australian index, because all the companies will benefit, are going to benefit from AI. And I think that is an element of what a lot of people are thinking, is that the AI is not just a boom for the stocks that are, the companies that are selling AI, but also for everyone else.
Yeah, but we don't have many AI companies, and don't
No,
forget
but all the companies like Myer and Coles and everyone else, all the other companies will benefit from, according to this theory, will benefit from AI.
Yes, that's true. The other point I was going to make was that 20% of the S&P 500 stocks at the moment are more than 20% below their all-time high, even though the overall market is at an all-time high. And yes, the share price has risen 13-fold in the last 5 years, but so have the profits. The profits have risen 13-fold as well. So the multiple of, around 30-ish at a market cap of 4.8 trillion, even after today's 4% drop, it's still not a crazy multiple because the share price has just been rising in line with the earnings.
So the other person I'm talking to this morning is Jared Minack, who put out a note the other day in which he calculated how much money the AI companies would need to earn in revenue in order to service the investment they're making in the AI infrastructure, which is really why NVIDIA's profit is up 13-fold, is because all these companies like Microsoft and Google and so on are investing so much in their product. And the answer, according to Jared, is $1 trillion a year of revenue. Now, the greatest business subscription service in history is Microsoft 365, and they made a profit. They made revenue last year of 95 billion. So the AI has to make 10 times that in order to service the investment that's been made in AI. So,
and did you hear that podcast interview with Sam Altman a couple of days ago, where the interviewer correctly says, "How does a company with $13 billion in revenue enter into contracts worth 1.5 trillion?" And that's a very good question. He said, it's more than 13 billion now, and it's going to be 100 billion by 2027. And we need the compute. Our market cap is massively high, and basically we're fine. And don't forget that they've just done a recapitalization, OpenAI, ChatGPT, and Microsoft has emerged with 27% of it, and worth over 100 billion. And Microsoft's just lost its exclusivity deal with OpenAI, and a week later they've just done a $38 billion contract with AWS, with Mr. Bezos. So they're spreading the love around with the compute. So this whole big circle of major tech players playing with each other is true, but Microsoft still, as the biggest shareholder in OpenAI, is using some of that $95 billion a year in revenue from that product to prop up as a major shareholder in OpenAI. So that's why OpenAI won't go broke, because of the power of its backers, both from a shareholder point of view and a customer point of view. The whole thing would fall over if OpenAI won't break, so they won't let it go broke.
Well, it's not going to go broke, crikey.
But it needs to list. For me, that's the biggest worry, is it needs to list so there's transparency. You can't have Sam Altman saying, "Oh, it's more than 13 billion. Oh, it's going to be 100 billion by 2027. I mean, mate, put it in a prospectus, put it in the annual report, lodge it with the SEC. Don't just come out with these figures like that. I mean, just get public and be more transparent, because it looks impossible, all these commitments you're making. And I can't see where the revenue is going to come from. But you're saying it'll be 100 billion in revenue in 2027 when it's only 13 billion last year. I mean, that's exponential growth.
Yeah, we better keep going, and we're not going to get through these 17 questions. In fact, there's no way we are.
No, well, I'm going to summarize Sam, and you're going to answer it. So Sam's asking about the removal of the energy subsidies, mainly from the states, and the impact of that on the inflation numbers. And he also talks about the systems being gamed, where the energy retailers are gaming the system with the sign-up credits, and he makes a good point that about the real value of the credits when you change customer. But do you think the inflation numbers, Alan, it's a big factor that these energy subsidies are being withdrawn or could be withdrawn in the case of the feds?
Well, the biggest price the biggest component of the CPI that resulted in yesterday's non-rate cut was electricity. So yes, I mean it's obviously a big part of it, and I'm interested that basically the RBA didn't worry about that. They just said inflation's too high, we're not cutting, and I think we'll have to wait and see what happens with inflation next time.
I think the feds will keep their $75 a quarter subsidy going, being conscious. They've got the balance sheet to support it, and just being conscious of the inflation impact. But we'll see where Chalmers and Mr. Albanese land on that one. Now, we're going to skip the one about attending AGMs. There's too many. We're going to go to Kane's question about, should staff who work in roles that cannot be performed remotely and are required to attend the workplace in person every day be awarded financial compensation for doing so? They've got the vehicle maintenance, tolls, childcare, loss of personal time. Meanwhile, people who sit at home get the financial advantage of that. So, Alan, do you think that people should be paid more if they're forced to come into the office?
I think there is a case for this. Yeah, either that or people working at home paid less. I don't know. I mean, that's never going to happen. But I do think that obviously, driving the car to work and paying childcare and all that stuff is more expensive.
I suspect this is actually just coming through increasingly in contracts. So the contract where you can work from home more, you'll work for less. And I think that's where it's coming through, rather than some adjustment.
It'll never be embedded in awards or something, or in the national wage case. But I think that I think you're right. There's definitely a case for getting paid a bit more if you have to go in the office every day, and I think maybe companies are going to have to do that.
I agree. Now, what about Harry? Question 12 is a shareholder in A2 Milk, and he's been sent a letter by Shine Lawyers about a class action against the company for making misleading reports about their deals in China. Harry's saying he doesn't really understand the case and was hoping I could shed some light on it. And also, with China's temporary ban on BHP iron ore imports, could their reluctance to release this information to shareholders also lead to a class action? Now, Harry, it is interesting. One of the few things you will get in the mail these days as a shareholder is a letter from the class action lawyers, because no company will ever give the email addresses of their shareholders to the ambulance chasing class action lawyers. So they have to revert to the old snail mail to sign you up. But the A2 Milk situation is just the classic class action of if you hide bad news and then you release the bad news and the share price crashes, the class action lawyers will round up the people who bought the stock before the crash and will say, we've lost money because we bought in and the price was artificially inflated because you were hiding bad news. And there's been $6 billion of settlements along this line. Maurice Blackburn's got about $4 billion of those. And now there's a bunch of copycat lawyer firms and litigation funders who are all trying to eat the Maurice Blackburn pioneered franchise, and A2 Milk is one of them. But I think the game's a bit over. There's not as many big settlements as there were before, and you often get 2 or 3 different class action lawyers launching actions, and then the poor judge has to sit there and negotiate a joint action with 3 class action law firms and 2 litigation funders. So I don't know. A2 Milk, look, there may be something in it, but I think the class action game is a bit over milked these days, to be honest, by too many ambulance chasers, because too much money was made by Maurice Blackburn building up the franchise to start with.
I do think it's outrageous that BHP has not been informing shareholders of what's going on with China. I mean, Bloomberg has a story saying that China's banned iron ore imports from BHP, and that's it. You don't hear from BHP at all. Unbelievable.
I actually think there's a case for it, because you can really get hurt in the China game with public statements. So I reckon the BHP board is sitting there saying, if we talk about what China is doing, this will hurt us. It is therefore in the shareholders' interests to be diplomatic. It's just like QBE Insurance, Alan. The day after September 11, they were technically bankrupt in terms of the size of their liabilities around September 11. And they did not come out and say that, but instead they raised capital, they played for time, and then they delayed the claims. And like a good insurance company, when you've got a massive deluge of claims, you just play for time, litigate, raise money. So you don't come out and say, oh, the towers have gone down, we're the biggest insurer, we're broke, because your share price crashes. So sometimes you've got to be a bit diplomatic in what you say in a crisis, because that's in the long-term interests to manage through the crisis. It's like screaming fire in a theatre sort of stuff. You've got to be careful what you say, because it can be destructive, can create destruction just by saying it. But equally, you can't hide bad news in the long term, because you'll get sued for doing it if you do.
So we got time for one more question, I think. So you can decide which one.
Okay, so John says, over the years, I've become increasingly cynical about senior executive and board remuneration. As they land in my email, I look at business performance and then the dreaded remuneration reports. And then he goes on to complain about Capital Group, which has got big salaries and not enough profits. And are these remuneration reports really worth it? And frankly, I'll tell you a story. Right now, Alan, I've lobbed 2 questions at the Chorus hybrid AGM in Auckland. A Chorus is like the Telstra/NBN of New Zealand. It was spun out of Telecom New Zealand. It's the infrastructure, it's the copper wires business and the broadband. It's 61% owned by the Kiwi government, market cap $3 billion. The government's looking to sell down. And my written question was, New Zealand is a backwater because you never put up remuneration reports. You're disrespecting our shareholders. It's standard all over the world. Why won't you voluntarily put up a remuneration report? And they'll do the usual. It's not the law in New Zealand. We're not corrupt, et cetera, et cetera. But I think they've been great, remuneration reports. And they've probably gone too far. 30 pages is too much. But overall, the Alan Fels reform, more than a decade ago, of 2 strikes, 2 votes of more than 25% spills the whole board, and management, vested interests, can't vote on their own remuneration, that has contained and controlled remuneration in Australia. Whereas Elon Musk tomorrow will be voting his own 13% stake on his own pay deal, just like the Murdochs have been able to vote in favour of the remuneration reports and the $2 billion that Murdoch men have taken from public companies in salary and bonuses over the last 25 years, because the system in the US is hopeless where you can vote on your own shares. So Australian governance is great and our remuneration report system is great. The Kiwis should adopt it, but maybe try and keep the remuneration report to less than 30 pages, because at the end of the day, you're meant to be making money for shareholders, not doing War and Peace in the annual report on every last dollar in the remuneration report system.
So has the Kiwis' failure to adopt our remuneration system meant that they're out of control over there? Their pay has gone berserk?
No, they're actually below, and that's one of the arguments they make. But I am thinking, Alan, I am thinking of lodging a few board tilts next year at the Kiwis, and saying, I'm running for your board on a platform of introducing voluntary remuneration reports, just like I'm running for 6 boards on November 28 of Perth-based mining companies that have physical AGMs in the world's most isolated city. So you shouldn't do that.
You better be careful. You might actually get on one of the Kiwi boards.
No.
And then you'll be in trouble. You'll have to keep flying across the ditch.
Alan, there is no danger of me getting elected. I've got 1% in the last 3 tilts on average, NAB, Aristocrat and AUB. So there's no chance of getting elected, but it's amazing how many boards take it seriously. Oh, we've looked at him with the skills matrix and blah, blah, blah. And I say, mate, just respond to the platform. Just explain why you ripped off the retail shareholders by doing a placement with no share purchase plan, why you haven't got any independent directors in the case of Myer or Reece or Harvey Norman, and why you're having a physical AGM in the world's most isolated city. Just deal with the issue. Because I'd rather be putting up a notice of motion, but you can't do that in Australia. All you can do is run for the board. So you run for the board as a de facto way to raise an issue, and everyone keeps taking it seriously as, he's trying to get on the board. I'm not. I'm just trying to raise an issue and pressure you to lift your behaviour and make some change. So stop ripping off retail shareholders, for instance.
Good for you, Stephen.
And I'm going to blame you if I do badly. They didn't like Alan Kohler's association in the notice of meeting, and anyway, apologies for the embarrassment by association, Alan.
Well, without me, Stephen, you'd get 2%.
Well, maybe so.
All right.
Anyway,
thanks, everyone. Thanks for listening to today's episode of Money Café. Thank you, Stephen. I'll be back next week with James Thompson. So send in your question and we'll answer it together. Email the question to themoneycafe@eurekareport.com.au. Till then, I'm Alan Kohler, founder of Eureka Report, now part of Intelligent Investor and a person on the ABC.
And I'm Stephen Mayne, and we'll see you in a fortnight.